Good morning, guys. I'm Nilesh, and I represent the San Francisco chapter of the Institute of Chartered Accountants of India. It's a sunny Saturday morning in Silicon Valley. We had a wet week with lots of rain, as I was telling Vijayji. However, now it's a sunny, clear Saturday morning, perfect for some outdoor fresh air and crisp sunshine. But I can see many Bay Area chartered accountants who've decided to stay indoors and have joined us. So thank you for all who are joining us on the Saturday morning. I can assure you all it'll be all worth your time and you won't regret missing the sunny, crispy morning. Today's webinar is focused on the Indian budget of 2025-2026. This event is jointly organized by the Indian Consulate in San Francisco and the Indian Institute of Chartered Accountants of India, San Francisco chapter, as well as the British Columbia chapter. However, we have audience members from all over the United States, and even from India. We have a lot of other chapter leaders also joining in, so a warm welcome to all of you who joined us today. As you know, the Union Budget 2025 marks a very transformative step in India's journey towards becoming a $10 trillion economy. For NRIs, this budget offers a mix of opportunities, tax reliefs, responsibilities. When the budget was announced, there was a lot of focus on reduction in income tax rates. However, there are many aspects of the budget that are uniquely relevant to NRIs. And today, we will unpack all of that for you. We are lucky that we have a chartered accountant, Ved Jain ji, who will deliver the keynote address today. Apart from being a past president and he's no stranger to all of us, he's also known as a tax luminary. He will make a presentation which will be followed by an open question answer session. Audience members are requested to post their questions in the chat window. I'll be monitoring that and I'll post these questions to Vedji at the end of the meeting, or the rather end of the presentation. So please keep the questions flowing. I already see 3-4 of them and I'll keep a watch on them. One disclaimer before we begin, this is purely knowledge sharing session. No one is providing any kind of advice. Every member in the audience is requested to consult their respective attorneys and advisors before taking any tax or investment decision. Before I hand over the stage to Vedji, I would like to invite Abhishek Sharma ji, Counsel, Indian Consulate, to share his perspective. It's a great honor to have you, sir. Over to you, Abhishek ji.
Thank you. Namaskar. Very good morning to all of you. At the outset, on behalf of the Consulate General of India, San Francisco, I thank ICAI for organizing this important webinar on India Budget 2025. As you're already aware, the most important highlight of this India Budget 2025 was the income tax threshold reduction, making zero tax for up to 12 lakh of income. So now more money in the hands of the middle class. We are expecting that it will boost consumption and it will give a push to many sectors such as automotive, real estate, FMCG, etc. The Honorable Finance Minister in this budget outlined 6 main principles for Viksit Bharat 2025, Viksit Bharat idea. So first is zero poverty. Second is 100% good quality school education. Third is high quality, affordable and comprehensive healthcare. Fourth is 100% skilled labor with meaningful employment and 70% women participation in economic activities, and farmers making our country food basket of the world. So these are the pillars on which we are aspiring to become a developed country by 2047. And the focus was on 4 main engines of the development: agriculture, MSME, investment in people, economy and innovation, and exports. So if we look at the financial sector reforms, there are 2 major reforms. One is FDI in insurance sector from 74% to 100%. And the second is they have started Grameen credit scores where public sector banks will rate people based on their credit history. Another important aspects were revision in the criteria for MSME. They have increased the investment criteria 2.5 times and the turnover criteria 2 times. So now there will be more coverage under MSME so that they can take advantage of those benefits which are offered to MSMEs. Apart from that, they have initiated a fund of funds for startups to promote innovation. So there will be 10,000 crore further contribution to the startup fund. There will be a deep tech fund of funds. And for the first time entrepreneurs, they have started for the people who are up to 5 lakh level, and the loan up to 2 crore will be provided in next 5 years. They will be provided for up to 2 crore of loan under this scheme. Apart from that, there are 5 national center of excellence for skilling, which will be set up with global expertise and partnership. There will be a center of excellence in AI for education. So there are already certain center of excellence on AI, which are on healthcare, agriculture, and sustainable cities. And this education will further improve the quality and skill perspective. So with that, I wish the very best to ICAI and all the NRI community for the upcoming financial year. Over to you. Thank you.
Thank you, Abhishek ji. That was a great summary. And as I said, it's an honor to have you on this webinar with us. Thank you for your support and thank you for co-hosting this whole event with us. Appreciate it. Now we will turn all our attention to Ved ji, our beloved past president. Needs no introduction, as I said. Over to you, Ved ji. It'll be great to hear your perspective.
Thank you, Nireshi, and good morning to all my friends in US and the Canada. It's a pleasure to be part of this program being organized by the ICAI San Francisco chapter as well as the British Columbia chapter in collaboration with the Consul General of the San Francisco. As we know, when the budget comes, expectations are high and everyone wants something out of this budget on these issues. But one thing which I notice is as a chartered accountant, we know at the end of the day, budget is a balancing exercise. You have an income and you have an expenditure and you have to match it like a trial balance, which you have to do it on this issue. That's I believe the budget making exercise is. Before I come to the nitty gritties of the budget, what is there in the store in the budgets, let us look at the scenario, whatever in what background this budget has come up. We had an election and Mr. Narendra Modi got elected. The third time the BJP came back in power in July, and they made a budget in the July 2024. That was the first budget in the third term on the Ishka. And in between this period, 24-25, there were different headwinds and tailwinds. Globally, there were all headwinds. We had crisis in the Ukraine, we have crisis in the Middle East, we have a crisis in the somewhere in China and Taiwan. We have a crisis with North Korea, South Korea, all those issues were there. And then economy getting slowed down in the Europe and other parts of the world, demand getting sluggish on that part and challenges coming out. In that scenario, obviously, the economic scenario across the globe was not too optimistic. Those are the headwinds for the finance minister while presenting the budget. What to project, how to project, and how to make estimation look into the economic slowdown happening across the globe. But at the same time, there were some tailwinds for the finance minister. The Indian taxes collection have been very, very impressive. As I hope some of you may be knowing, the income tax collection in the year 24-25 has been the highest ever and it surpassed the estimation. We had a revised estimate also. GST collection have been doing very well on that part also, and that's it. And that gave a leeway and some scope to the finance minister to make out some schemes, some areas, and to give some relief on that parts. And that is why when we look at this budget, she has done everything to make it that India is on the right track where we need to be. As Vijayji said, Nilesh said that we need to be $10 trillion. Of course, the government promises first to touch up $5 trillion and then to go to the $10 trillion on that part. On that part, if you just permit me, I will just take you to the few slides to show you the background and then come to the issues one by one. Can you see the slides now?
Yes, we can see it.
It's
Perfect.
clear now?
Yes, absolutely clear.
Now, this is the overview of the GDP growth globally. I know that this slide is too small and you may be finding it difficult to just get the numbers here. If you look at just at the picture, the on this point, somehow I highlighted it. What is the global scenario? Global growth was projected at 3.3% both in 2025 and 26. That is below the historical level of 3.7. Global financial conditions remain elevated by geographical tensions. In the US remained robust with the economy expanding at a rate of 2.7% in year-over terms. Growth continued to be subdued in Europe, Germany, etc., all those issues. And even Japan outward contract mildly owing to the temporary supply disruptions. Growth in China is also getting slowed down. And there are headway inflation decline, so and so. All these are the issues and the background which happened on that part. But India still continues to be the world's fastest growing economy. An idea can be had from the fact of this, just one slide I would like to show you on that part. What has happened in 2025 and what is happening in 2006. I'm talking about of this, what we call this Brazil, China, and India. Brazil has grown 2.2 in 2005 and expected to grow at 2.3 in 2026. China 4.45 versus 4.0. India continues to be 6.7 in the year 2005 and 6.7 in 2008. The finance minister in the budget has talked about 6.3 to 6.8, somewhere the figures in the next year, which is projected to be. So that gives you an idea where we are placed in India and what we are on the issue on this point. This was the background and this is the working India. This slide I will come later on. Now, what is the outcome in the budget to 2025? I have divided my deliberation into three parts. What is the economic issues, economic snapshot of these budgets? Then what are the growth areas and what are the measures which have been initiative which have been put in there? And then the taxation aspect and how does it affect us on all this aspect? When I will look at this, you probably may not be need to understand what this budget is total about India. You would have heard the finance minister's speech, etc. on this part. You will know that a total expenditure India, which has projected to be incurred in the financial year 2005-26, is 50 lakh odd crore rupees. This is the total expenditure the government of India is going to incur, and out of which 11 lakh 20,000 crore rupees is going to be the capital expenditure, which roughly gives a figure of more than 20% of the total expenditure will be on a capital expenditure on that part. And how it is going to be financed out of it is that the financial part says 34 lakh crore rupees is the net revenue. This net revenue is only of the center. What center has given to the state is a separate part. That's a separate part. And 16 lakh crore rupees odd will be the borrowing with the government of India will be making in the year 2005, 26 only. So meaning by, if you can just assume a chartered accountant, 2/3 comes from my revenue and 1/3 comes from my borrowing. And the one part is that out of the 16 lakh crore rupees, 12 lakh crore rupees goes as a part of the interest to over the debt burden. But still, this budget is very impressive budget. If I look at the other numbers on coming out on this part, that what is this contribution coming up and what is this area? This slide shows you that how this picture is emerging and which area is contributing how much and which area is contributing. You will see that first part is what is the net central revenue. I can skip it all, but you look at the middle slide, which says that how much is the 22% of the total budget is coming from the income tax and 17% from the corporate tax. So corporate tax is also an income tax which is on the company. So 39% come from the income tax itself and 18% come from the GST. And then there are all non-tax receipts which are coming it out on that part. And the third slide is how this amount is being utilized by the government. And as I said, 39 lakh crore odd rupees will be spent on the revenue side and 11 lakh crore odd rupees to be spent on the capital side. Now, on this basis, now a question comes up, are we on a financial track? Are we on a right track in the financially working? Or what we are doing is how India is faring it. Now, looking at this, you can just look at the first slide, left side. What is my real GDP growth? My real GDP growth is projected to be 6.4%. You can see over the period 2018-19, it was 6.5%. It went down to 3.9%, 1920. You will know the COVID period has started. Then it went to a negative minus 5.8 in the 2021. But in 21-22, because of the negative with 5.5, it jumped to the 9.7%. And then it came down to again to 7% because that 9.7% was the exceptional year. And now it is projected to be 6.4%. And the best part of the budget is the fiscal deficit control, if you can look at this. These are the three rows, but we need to look at the top side only. Our fiscal deficit is projected to be a 4.4%. We all chartered accountants know that fiscal deficit is just like a salt to the budget. If you don't have a fiscal deficit, the growth will not happen. But if you have too much salt, then probably your economy and you will be having a bitter taste. But some salt is required. Now 4.4% is the projected fiscal deficit, which is for 25-26, as against 4.8%. This is despite all concession, all expenditure which has been marked by the finance minister for the various scheme, various project and development, etc. And this include 11 lakh crore rupees odd on the capital expenditure. So if we look at the fiscal deficit of 16 lakh crore rupees, which I have told you on that part, now 11 lakh crore rupees goes to the capital side. So really it is not being, it is basically an investment. And 5 lakh odd crore rupees in addition thereto is the money being given, being treated as a revenue expenditure, but it is a grant to the state government for meeting the capital expenditure. So that Indian economy is on a very, very sound track and very well planned and very well worked out on that basis. This is some slide which I can skip looking to the time constraint, but just for your consumption or later on, this is how this money is being collected and what is the revenue receipts I am making it out. How much is the collection which is coming from the income tax over a period. Just look at this picture where 22 lakh odd crore rupees is coming from the income tax only, 22 lakh crore rupees. 10 lakh 61,000 crore rupees is coming out from the GST. And the total collection is going to come out on that part is 38 lakh crore rupees. And out of which 12 lakh crore rupees odd goes to the state government as their contribution. So 26 lakh crore rupees is left with the center. And then 6 lakh odd crore rupees is the non-tax revenue which they generate. So it makes roughly 34 lakh crore rupees and 16 lakh crore rupees, as I said, is the borrowing. So this is the overall financial side of the budget economic snapshot. So from the perspective who normally reviews the budget of the various countries, who analyzes the budgets and who gives marks to the budget, there are various parameters. And this budget is a budget which meets all parameters. Fiscal deficit is one of the biggest parameters. How much growth you have projected, that is the best growth in the world which you have projected. How much is the inflation usually there? The inflation is absolutely under control. And you will be knowing that day before yesterday, yesterday only itself, the Reserve Bank has come out and has reduced the repo rate from 25 basis point. That also gives the confidence the Indian economy is on the right track. Even to that extent, whatever the rate of interest which was increased during the COVID period, now it is going to be brought back to the level which it was slowly over a period before the COVID on this issue. So this gives us an overall slide picture on this issue. Now, another area which gives a positive side is about the India's confidence of the world in the Indian economy and the investment which is coming it out. If you see on the left-hand side, there is a total foreign direct investment flow which has been coming to the India. If you see from 62 billion, 74 billion, 81 billion, 84 billion, and then 33 billion, and now again in the current year, because this 42 billion is the figure of 8 months, not of the year. So now this is the contribution. This shows the level of confidence being reposed by the investors or by the people, whether it is FII or FDI or FPIP, they are making investment in India. This gives a number of the figures on that part also. Now, India has roughly $640 billion as a foreign exchange reserve, and it is number 5 as on date in the foreign exchange reserve globally in various parts of the world. So that also gives a comfort that our financial position and stability continues. And then it gives an idea on the right side that from where the money is coming. If you look at the share of top investing countries, it is very interesting, and maybe some information for your as a chartered accountant. You will look that USA is contributing 11%, but that is not the correct way to look into. We need to look into the fact that how much Mauritius is coming, how much from Singapore is coming, and how much is coming from the Netherlands. These 3 countries which the money is coming out is fairly good indicator that this is the money of the globally coming up, because there are tax incentive when the money comes from Mauritius, when the money comes from Singapore, when the money comes from Netherlands. Because India has a treaty with Netherlands also, which gives tax credit benefit to the people there in all that part. So that's a, sorry. Now this slide gives a picture of what is our position of the debt position. So sometimes it looks like that our debt position is worsening on that part. If you look at the figures of the debt position, we had, because debt position, overall debt position is counted with how much money you have borrowed as compared to your GDP. India has started with 49%. We have gone up to 61% in the financial year 21-22, mainly because of the COVID. But now it has been brought down to 56%. And the finance minister has promised that she will bring it down to 50% of the total GDP in the year 2029-30 on that part, which is a fairly good indicator that issue is on well under control on that part of the economy. This is on the figure on the inflation, which is also under control. And if you can see the number which is coming up, fiscally it is proposed to be 5.2%. It is easing out, mainly because of the food inflation, which sometimes happen because of the seasonal part on that part also. And the repo rate is also well under the control on that part also. Now, what has been proposed by the finance minister in this budget? And what are the areas where the finance minister is looking to work it out on that issues? If you look at this, the Honorable Consul General was talking about what is the theme of the budget and what are the areas. The theme of the budget is accelerate growth, secure inclusive development, uplift the household consumption, invest in private investment, and then broad areas which have been identified herein. If you look at this area, these are the areas which have been broadly marked: building rural prosperity, taking everyone together, boosting manufacturing, supporting MSME, enabling employment-led development, investing in people, securing energy, promoting export, nurturing energy supplies, and promoting export also. And then areas which need to be looked into is taxation, power sector, urban development, mining, financial sector, and regulatory reform. These were the broader areas which have been identified. And what are the announcements coming out in the budget? Now the focus, what is the issue? Now in this budget, the government wants India to make really a global manufacturing capital of the world. And we use the word China +1. And in this budget, particular focus has been put on certain industry which may be of interest to you as a non-resident, which may be of interest to the people who want to invest in India, which may be of interest to people who want to supply goods to India, because this budget has everything for everyone. Now you look at it, the focus product scheme has been made out to boost leather and footwear manufacturing. And in that regard, there's just drastic reduction in the machinery for the purpose of to be used in the footwear industry, etc. Then there is a national action plan to make India a global manufacturing hub for toys. Now, India wants to make electronic manufacturing as a major area. And in this regard, the finance minister has used the word toys, that we want to boost national action plan. And for this purpose, clusters are going to be developed for sustainable, innovative, and quality made in India. Then there is a mission to make in India with focus on the clean energy. So launch to mission private policy. And then there is a support for food processing activity. So these are the four areas which have been identified. And how it is going to help it out? Domestic manufacturing, clean technology, increase investment opportunities for private and foreign companies. Now, those foreign companies who want to invest in India, India is wide open in these areas. They can come and they can set up bases in India for that purpose. Creation of new employment opportunity for that purpose in this issue. Then there is a announcement, custom duty reduction. As I said earlier also, a large number of items, there is a drastic reduction in the custom duty. In India, the custom duty used to be up to 150%, which has now been brought down to 70%, and that too on very few products. And there is a complete exemption on critical minerals. Now you look at the certain minerals which are required for manufacturing, like cobalt power, lithium iron battery, etc. All those, there is no duty and complete exemption has been given. Similarly, on lithium ion battery, textile machineries, raw material, shipping sector, telecommunication, etc., there is absolute reduction in the custom duty. Idea is basically is that we will allow import of the machinery so that we can manufacture in India and then export it out on that part. So this gives an opportunity. I believe you sitting in US and Canada, I believe you can look into these aspects, how we can promote bilateral trade. India will be interested in buying machinery with no custom duty and then producing articles and then selling it outside globally. Now, this is a PLI scheme. I hope you will be knowing it, production linked incentive scheme. The government of India gives that more you produce, I will give you incentive, cash incentive. And one of the major beneficiary has been the mobile phone industry, but now it has been expanded to support battery cells and storage system. Increased outlays have been increased on electronic manufacturing, increased outlays on food processing industries, increased outlay on automobile manufacturing ecosystem. So now, in order to promote manufacturing, whosoever want to produce more goods in India, maybe want to shift base or put an additional factory, etc., whatever the production, increased production is given, the government of India is giving a financial support, which a lot of area has been put in on that part also. Now, as I said, India want more electronic manufacturing to happen in India. India want more toys to be manufactured in India. In this regard, a special provision has been created in the income tax itself, whereby now 25% of the good amount received in respect of goods and services supplied or facility being for putting a manufacturing facility in India, in the case of a non-resident, that will be considered to be the income taxable in India in the hand of the non-resident. So any non-resident who helps and facilitate in putting a manufacturing facility for electronic manufacturing, or who supply any goods or services in respect of manufacturing of electronic item, then 25% of that amount which he receives will be considered to be an income and which will be taxed at 35% rate. I believe India is taking a very big lead in the development of semiconductors and other electronic items. So this can give a very big boost to the Indian manufacturing. And also, of course, India is open up to the economy for manufacturing in India. As the Honorable Consul General were talking about, there is a big jump for the MSME, micro, small, and medium enterprises. As you all know, that micro, small, and medium enterprises enjoyed certain privileges in India. Government supplies, government concessional duties, etc., are applicable to micro and small and medium enterprises. Certain government tenders are only allowed to be participated by these micro, small, and medium enterprises, where heavy industries are not allowed to engage. In that regard, there is a drastic increase in the threshold under which a micro enterprise is to be classified, or a small enterprise is to be classified, and medium enterprise is classified. Now, medium enterprise with an investment of 125 crore and turnover up to 500 crore rupees will be considered to be a medium, and 25 crore rupees investment and 100 crore rupees will be considered to be a small enterprise. So on that basis, and 5 crore and 25 crore is a micro on that basis. So these are the area which has been worked out and for the development of the economy there. Now, there are two more areas which have come up it out. Now, India is interested in setting up 50 tourist destination sites, and this can help promoting tourism, more travel, more businesses. So that area one can look into, that where how much investment can be made. Then medical tourism and heal in India in partnership with outside sector is permissible. If you can collaborate, if you can find out people who want to put in money, best of the medical facility though are available in India, but people who want to put money investment, that medical tourism India is promoting. I have been told that in many of the advanced countries, I don't know how far it is correct, like Europe also, in UK and some part, there is a long waiting list for a patient to get even a MRI done, a patient for a cataract surgery to be done. And that helped India in promoting medical tourism. So that can be one of the area which we can look into for putting an investment. Similarly, India is looking up to putting under the UDAN scheme, putting more and more airports and facility across the India globally. These are some of the issues on education and health. So I can just skip it part because India is now going to have 4 more IITs with 6,500 students, 10,000 additional medical seat, doctors, etc. So these are the areas which India is going to put in more and more money on that part. Another area was opening up the financial sector. Insurance was one of the sector, as the Consul General talked about it. Now FDI investment in insurance sector can be up to 100% from 74%. It's a very good move. I believe more and more, I think foreign companies can come and put money in India and can have 100% control over the company. And then this is another big area, Bharat Trade Net, because a lot of problem comes in ease of doing business when you export from India. Now they say we are going to put a digital public infrastructure Bharat Trade Net, which will be set up as a unified global for trade document, financing solution. So all trade document, export document can be on a same platform. That's also another. Another area is the air cargo facility for warehousing, etc., for high value perishable goods, mainly to help food processing industries also. That's the area which is India is opening up on that part. Maritime is another area which is going to come up like anything on that part. This is where India is going to put a shipbuilding, repair, and new shipbuilding facilities, etc. And this is to improve India competitiveness in the shipping industry. That area, the finance minister has marked a lot of money and has provided a lot of facility in this budget on that part. Then there's the nuclear energy. India is going to put in 20,000 crore rupees, and India want to have the nuclear energy capacity of gigawatts on that part. Similarly, now, as a continuing reforms, the government is going to demonetization, meaning thereby whatever the land, building, or assets or public sector undertaking it is having, as assets monetization plan, 5-year plan has been announced that 10 lakh crore rupees will be generated out of the assets monetization. It can be surplus land, it can be surplus facility, or even privatization, which can be done. Then for infrastructure, public-private partnership is a 3-year project, which is government going to take with the state government, and it can be a very good move if some investment come to India in the public infrastructure on that part also. Fisheries is another area. Probably some of you may be having an aware. India is Andaman, Nicobar, and Lakshadweep. There are 2 islands, and under the international law, there are exclusive economic zone, which are beyond the boundaries of that country, 25 kilometers from that area, and where you can have a fishing on that part. So India is going to put up a large scale investment on that part for fishing, etc. Makhana, of course, is a new word which probably has come up, and some of you may be aware of. This is the superfood which has come up now, like a dry fruit, and we have now cashew nut, almond, and like that. So makhana is another area. So it comes from Bihar, particularly a particular belt is there. So they want to put it because now it is absolutely an unorganized sector, and people who are working in these industries are not so well educated, I will say, or well trained, etc. So the government is putting up a focus on this, looking to the new interest being generated globally in this makhana on that part. So this is an area which is talking about, I talked about the some of the industrial or commercial side or what we call business side. So now I can switch over to the most sought after and the talk of the budget, concession of no tax up to income of rupees 12 lakh. So these are some snapshot, and this is the area, if you can just look at the slide, This was the ad put in by the Amul after the finance minister has announced her budget. Budget bhi hai, bachat bhi hai, less tax, more snacks. Income up to rupees 12 lakh, no tax in India. Just visualize from your US perspective. India has a per capita GDP of roughly $2,500. And $2,500, if I convert at the present rate, maybe somewhere 2,25,000, 80,000 rupees. And roughly more than 5 times of that per capita GDP is the income not chargeable to tax in India, that 12 lakh rupees. That will not be a tax level. Now you compare yourself, if you are in US, what is your per capita GDP as on date? Roughly $70,000, $66,000, if I believe on that part. And how much is the threshold exemption you enjoy in the US? Can you have an idea? I believe it is roughly $12,000 or more than that dollars. Somewhere $12,000. Am I right, Nilesh? That part?
Yeah.
Yeah. So now under the new scheme, this is exemption. But one part is there for yourself, non-resident, this exemption is only up to 4 lakh rupees. This 12 lakh rupees exemption is available only to a resident and that to an individual. All other category, non-resident, association of person, HF, etc., exemption is only up to 5 lakh, 4 lakh. And then there is a slab 4 to 8, 5%, 8 to 12, 10%, 12 to 16, 15%. But in that process also, now the limit has been increased, everyone has been benefited. And you can have an idea that for resident, how much is the benefit coming up? If you have an income of rupees 12 lakh, your tax liability goes down by 83,000. If you have an income of 16 lakh, your tax liability goes down by 52,000. If you have a tax liability of income of 20 lakh, it goes to 1,40,000. A person having income of more than 2 crore, its tax liability goes down by more like 1,43,000. And for you as a non-resident, this is the benefit which you are getting it. It is not that the non-resident will not get the benefit because the tax rate structure has been reworked out. So if you have an income in India up to 12 lakh rupees, the tax advantage under the proposed scheme will be 20,800 rupees. But if you have an income of 24 lakh rupees, your tax advantage will be roughly 1,14,400 rupees. So these are the benefit which has been given under this budget on that part. Now, based on this, I did some homework. How much time we have, Nilesh?
It's another 20 minutes, but I want to leave about 10 minutes for questions as well. So another 10 minutes for the presentation.
So this is just a rush through on the part. Now this is the calculation which I did for that part. That how much is a person, a salaried class person can make a money by saving is. This is 62,000 rupees is the benefit which is getting. And when I look at the professional side, this is the money which is coming it out because in India, up to income of 75 lakh rupee total receipt, you get a 50% rebate under a presumptive model of taxation. So if in case you have a receipt of 12 lakh rupees, entire amount will be refunded. 24 lakh rupees, 2 lakh 40 will be refunded. And this is the calculation which comes up. And now take a case, a person in India has a professional receipt of 24 lakh rupees and a person who gets a 2 lakh rupees per month as a salary. Interestingly, if he gets a 2 lakh rupees retainership, tax liability will be nil because his 50% income, 12 lakh rupees will be there, and 12 lakh there will be no tax. As against this, there will be a liability on 12 lakh rupees on because the salary income is there or 24 lakh rupees, then there is a tax liability which is coming out. So this is the various advantages which are coming out on that part. And then this in India, if for a businessman, if a turnover is 2 crore rupees, 200 lakh rupees, it is a turnover in a year, tax liability is nil. If it is entire turnover is by check. But if it is 150 crore, whatever 1.5 crore, that is 50,000 rupees per day, because and turnover is cash as well as check, then 8% is the presentive model, the tax is nil. Just see how much ease of doing business is there. A person having a daily turnover of, let's say, 50,000 rupees in cash, no income tax is required to be paid. That's the advantage which has come up on that part. Then there are certain benefits for the non-resident which are specifically announced. This is a significant economic presence. If you are importing from India for the purpose of export, there used to be a controversy whether you have a business connection, and so that significant economic presence, so you can be taxed on that part because export is taking place by making purchases from India. So it has been clarified in the budget that there will be no tax on such part because it will not be considered significant economic. Then there is certain concession which is coming on transfer pricing, that in case your transfer pricing arm's length price has been determined for 1 year, you can have the benefit of the same ratio and same money income for the next 2 years. Then this is a 44 BBD model, which I already talked about you on that part. Now this is another. India is going to renegotiate bilateral investment treaties. You all know that various countries enter into investment treaties where investment made by a entity or an individual or a person from one country in another country is governed by the treaty which both these countries have entered into. So there have been some disputes going on the taxation side, whether bilateral investment treaty will cover up the dispute on taxation side. So India has now announced that we will want to keep the tax disputes outside the bilateral investment treaties, and that's why they want to renegotiate these treaty with the various countries on that parts. Now, another area of interest to all of you may be that this gift city we call International Financial Service Center at Ahmedabad. Now, this offers a lot of opportunity for non-resident and foreign companies to operate in India and not to pay any tax in India. This has been developed on the model of Singapore, where many people in income earned outside Singapore is not chargeable to tax. And that's why Singapore has become a financial capital as an alternative to most, I will say, Switzerland and various other countries. So India is trying to develop this gift city IFSC on this part. And many transactions, almost all transactions which are done in that part are not chargeable to tax. So some of you can look into this aspect. Offshore banking is fully allowed on that part. Aircraft leasing, shipping leasing, etc., has been opened up, and this whatever you one earns from there, that is not taxable on that part. Then these are the key some fiscal benefit of setting up in IFSC. I've tabulated it on that part. You can just look into that on that part. These are the other benefits which are available under this part on this part. Another benefit which has been given in the income tax is that in case you have committed a mistake in filing a return, now that there was a 2-year period which was earlier available for making correction with paying additional tax of 25% or 50%. Now this period has been extended to 4 years. In case it is beyond 2 years, but within 3 years, then 60% additional tax. And if it is beyond 3 years and but less than 4 years, then it is 70%. So this is the additional tax government is trying to make a increasing voluntary compliance. I may just add that some of you may be aware that as a non-resident, you are still required to file a tax return in case your income is more than 4 lakh rupees under the new regime. And in case you become resident, then you are liable to file the tax return and also declare your assets outside India. So many times when non-resident come back to India, they forgot to disclose their investment or their dividend or other income or other assets held by them outside India. After becoming a resident, it is mandatory to declare it. And this type of provision can help where some mistake has happened and where one has forgotten to declare it also. Then there is a drastic change in the tax withholding provision. Substantial relief has been given. So I can just skip on that part, and that's a issue on it. Now, in this slide, this presentation, which I believe the organizer can share with a participant, I have tried to capture certain areas which non-resident can are take available in under tax law, various interest, other benefit, dividend income, which is taxable. You can just rush through this. And these are the area which one should take care when you are leaving India. And there are certain area when you are coming back after being non-resident. And I returning to India permanently for coming back also on that part. Now, this is one before I hand over to Nilesh for question answer. This is something interesting, may not be directly related to the what we are today, but what is going to happen in future. Just want to share, look at this slide. This slide is the number of live births per woman. What was the ratio in 1950? In 1950, the world ratio was 4.9 childs per woman. China was having 5.8, India was having 5.7. In 2023, India has come down to 2.0. US is 1.6 and world is 2.3. And in 2050, it is projected to that India it will be 1.3, China will be 0.7, and world will be 1.6. So our ratio of child per woman in 2050 will be less than 1.3, less than 1.6 of the world. You will be wondering why I have raised this issue and what is the relevance. Now look at this picture. This gives an interesting picture on that part. China's population today is 1.4 billion. It will come down to 40 billion. As again 142 crore, it will be 40 crore. And Indian population will come down from 143 crore to 99 crore in the year 2100. And Korea population will come down from 52 to 40 crore. This is going to be the world scenario over a period on this basis. And look at this, what will happen to India's demography. In 2024, we are a pyramid like this, like a pyramid like this. And in 2100, it will be like V shape, it will be like this on this part. But that brings me back to the one top slide. Nilesh, just 1 minute, I will finish it off, then I will have a question answer. Now, I wanted to show this slide. I believe my number is small, maybe visibility may be a challenge to some of you on this part because the font size is too small. Can you look at this right hand side, 1979? Chinese economy was 178 trillion. India's economy was 153 trillion. China's per capita GDP was $184. India was $225. India's per capita GDP continued to be better than the China till the year 1991, when India's per capita GDP was 1990, Indian per capita GDP was 349 and China per capita was 311. And now come to this side of the slide and just look at the 2004. Now, if we look at India's present total economy GDP is $3.54 trillion, $3.54 trillion, and Chinese is $17 trillion. And in 2004, Chinese economy was exactly where we are today. In 20 years, China has multiplied by 5 times in their economy. 3.5 to 17.5. Now it is somewhere 19 trillion even worth of that part. Now, if I take that way, I can be reasonably sure Indian economy by the time 2047, which we call a Viksit Bharat, which we will be the world's second largest economy of the world. And we will be having a major share. Total economy GDP of the world is about $110 trillion, out of which $27 trillion is with the US and $20 trillion is about with China. So $47 trillion, that means roughly more than 40% of the economy is with these two countries. In 2047, India will be one of these two countries which will be controlling more than 40% of the economy. That's the overall scenario of the Indian economy. And I see this budget 2025 is a step in that direction, opening up Indian economy, allowing opportunity for people to make investment in India, overseas investment in India, and promoting Indian product on that part. So that's my presentation. Nilesh, we can now just take questions and answer from the people on that issue.
Sure. Thank you, Veji, for a comprehensive presentation, and thank you for the offer of sharing this with the audience. We will make sure that everybody gets access to that file. We have last 10 minutes and we have a lot of questions. I will give priority to the people who ask questions while they're registered. There were a lot of people who put in questions when they started filling in the form, so I'll start with those first. We have a question from Pallava Acharya. His question was, how will the 120-day residency affect NRIs and whether it's likely to be relaxed? There was a change from 182 to 120.
I know.
So can you talk a little bit about that?
I can tell you, see, this was amendment made 3 years back. And the idea was that in case people are traveling and residing in India frequently, then the benefit of the non-resident status should not be available. So this was more to do with the Middle East and the countries where the tax-free income is there, and not so much with the US and Canada. There is no possibility of any change on that part. And all that provision says that if you have been in India for more than 120 days and your income is more than 15 lakh rupees, 15, in India, then the benefit of treaty benefit will not be available to you. But I am reasonably sure all non-resident of USA, Canada, in case they have stayed in USA or Canada for more than 182 days, under a tiebreaker rule, they will be declared as a non-resident of that country, which obviously will mean under a treaty, India will have to treat them as a non-resident for that.
Okay, thanks. Hopefully Pallava will be happy with that answer. There is another question from Deepak Arora. His question is about, is there any change in indexation and capital gains calculation for non-resident Indians in this budget?
I believe in this budget there is no change because non-resident have been asking a fair and equal treatment which is available to a resident, because on 22nd July 2024, there was an amendment in the capital gains tax structure in India. Now no indexation is allowed, but there is a concession rate of 12.5% without indexation applicable. Looking to the lot of hue and cry happening in India, the finance minister, while passing the bill in the July 24, she relaxed a provision that in the case of a resident, in case the tax liability after taking indexation comes on applying a rate of 20% is lower than what comes to under 12.5, they can have the advantage. Unfortunately, that advantage or that concession is not available to non-resident, and in this budget also there is no concession given on that one.
Okay, thanks. I'm sure Deepak will be unhappy, but yeah, I guess that's what it is. Then we have one more question from Ramesh Konda. It's a general question as to what are the helpful tips for NRI who have income from rents and sale of properties, and what is the eventual ways to bring money to the United States? It's a very broad question. You
I
can
can just
choose
explain
how.
you
Yeah.
for the benefit of all non-resident. Under the India FEMA rules, a non-resident can remit out of the money which he has in India $1 million per year. $1 million. In addition, a non-resident can current year income. This is called capital account transaction. In addition thereto, whatever is the current year income that can be repatriated to India or outside India. So in the question, because sale of assets, capital will be a capital asset, up to $1 million he can bring it. Rental income, whatever is having, he can repatriate, he can bring to the USA every year, whatever the income is coming out.
Thank you. There's one other question. Again, it's slightly broad from Sangoy, where he says that what are the changes to the new Income Tax Act? I think that's a broad question. And do you have any timelines about when the new Income Tax Act code is going to be realized?
Oh, you see, income tax bill has been passed by the parliament, by the cabinet yesterday. It is going to be introduced on the Monday. I have some knowledge about the bill, but till such time this is put in public domain and shared, may not be appropriate to discuss about that bill.
Yeah, I can just request Sangoji to consult you privately one-on-one. One other question which had come in, and I'm reading out, what are the changes that have been made to long-term capital gains tax rates for non-residents, including FIIs? I know you covered about the NRIs. Anything relevant for FIIs?
Simple is, if you are holding a long-term capital asset, rate is 12.5%, and after surcharge and education cess, it comes to roughly 14.97. We say 15%. And it is applicable across the board on all.
Okay. You mentioned surcharge. I also noticed there was a reduction in surcharge for ultra high net worth income. Can you explain that from an NRI perspective?
No, there is no reduction in the surcharge from the NRI perspective.
Okay.
It's a income-based, slab-based structure of this issue.
Okay. Then the other question was, how does the increase in tax collected at source threshold for remittances under LRS, how has it changed?
Yes. Now, under LRS, the threshold was 7 lakh rupees, which has been increased to 10 lakh rupees. My slide carries that. If that picture, for each item, it has been mentioned. For educational loan, no TCS in case money has been borrowed from the bank or financial institutions. Otherwise, threshold 10 lakh rupees is applicable. Beyond that, 5% is the TCS which is to be collected by the bank.
I have a lot of questions still left unanswered, but I think we're running at the end of the session. It's 9:57. I'd like to pause here and give an opportunity to Vijay Gupta ji to share his perspective and if he has any questions before I close out the webinar. I do thank all the participants for their questions. We will be circulating the PPT PDF so that may answer some of the questions, but if something gets unanswered, log in again next time and then we'll be able to resolve that. Over to you, Vijay ji.
Good morning and good afternoon, good evening to everybody. First and foremost, I would like to extend my sincere thanks to Abhishek Sharma ji, Sri Ved ji, and you also, and Sudha, and all our distinguished office bearer members for coming to this session and attending it and seeing these thoughtful changes and other things in India. As a professional, like we are basically as a chartered accountant, we have to advise the client and we have to see what advantage as a professional we can get out of these budgets and the knowledge which we have got today. What I think that there is a need, like sitting here for a tax planning using investment route through Singapore, Mauritius, and Netherlands, which Jain Saab has told. So we should have a separate seminar on these special topic time to time. And also we should explore for our clients and ourselves, like what type of machineries which are going to be tax-free in India which we can explore which part of the world has that machinery and capacity which we can export, and our client can take the benefit of that. Similarly, the insurance sector, which is a very strong in US and Canada, we can work with these sectors to go to India because now they can 100% hold the shares out of it. The Bharat Trade Net, what Jain Saab has told, that is also a very good initiative which Government of India is taking. And also asset monetization, there is a lot of scope for that. As well as the PPP on pipeline sector, like there is a lot of being done on a road sector, and there are various American companies, Canadian companies, which has gone to India and got a benefit. Now, once the government is giving initiative on pipeline sector, we should work on it, as well as like the Makhana board and other things, which is the retail things. We as a professional should see what opportunities we can gain for ourselves and our clients. With these, I'm really very thankful, and we are very thankful to Vish, Sudha, and other people who has agreed to basically go together with this seminar. And I hope that in the coming future, we will have very frequently this seminar on a specific topic. Once Income Tax Act also comes, we will request Jain Saab to come and guide us what are the new changes on that. So over to Nilesh. Thank you, everybody.
Thank you, Ved ji. Thank you, Vijay ji. Thank you,
Thank you.
Abhishek
Thank
ji.
you.
Thank you, Sudha, and thank you all the other, members and chapter leaders from all over the United States. I hope you have a great weekend, and thanks for joining us. Bye.